Ever wondered how the stock market could turn your spare change into a fortune? Today, we're about to embark on an enlightening journey. The magical world of investing, filled with opportunities and possibilities, is awaiting us. The stock market, a fascinating marketplace where shares of publicly traded companies get exchanged, is a goldmine for those willing to take risks. It is a dynamic environment where fortunes can multiply. The principle is simple: buy at a lower price and sell when the value appreciates. The potential to build an empire of wealth is extraordinary, but it needs careful thought, precision, strategy, and comprehension. It's not just about numbers and percentages, it involves prediction, analysis, and intuition. It's a game of insights, patience, and timing, where the one with a keen eye for detail and the ability to predict the market trends is the master. But don't be overwhelmed. The stock market isn't as daunting as it may appear. It's a complex system, yes, but with the right guidance, you can navigate through it. And that's what we're here for. We're going to break it down, make it digestible. Together, we will unravel the mysteries, understand the mechanics, and hopefully create a roadmap to prosperity. Fear not, the stock market isn't as complicated as it seems, and I'll show you why. Before you dive headfirst into the stock market, there are some basic concepts you need to know. First up, stocks. They're simply your stake in a company. Purchasing a stock means you're now a shareholder. Then, there are bonds. Think of them as loans that you, as the investor, issue to companies or governments. They promise to pay back with interest. Next in line, dividends, a part of a company's earnings given to shareholders. Not all companies offer them, but it's a steady income source for those that do. Lastly, we have returns. It's the profit from your investment, either from selling your stocks at a higher price or from dividends. To sum up, stocks represent company ownership, bonds are loans made to entities, dividends are part of a company's profit given to shareholders, and returns are the profits from your investment. Grasping these concepts is key to stepping into the investing world. With this knowledge, you're now ready to take the first step into the world of investing. So you're ready to invest. But where do you start? This is a question that we all have to answer at some point in our lives. The journey into the world of investing starts with clear-cut financial objectives. Are you saving for your twilight years, a deposit on a property, your offspring's education, or perhaps you're aiming to amplify your wealth? Each of these targets might necessitate a unique investment strategy, so it is critically important to establish what you're striving for. Understanding your financial goals is the indispensable first step in your investment journey. Post setting your goals, the subsequent step is to evaluate your risk appetite. This is essentially an analysis of how much financial risk you're willing to bear. If the idea of monetary loss leaves you tossing and turning at night, conservative investments might be your best bet. Conversely, if you're open to embracing more risk for the possibility of greater returns, you might gravitate towards aggressive investments. It's crucial to remember that higher potential returns also come with higher risks. The next phase in your investment journey is the selection of an investment. The investment world is teeming with myriad strategies, from the buy and hold approach to day trading. Some investors might have a predilection for index funds, which are programmed to track the performance of a specific market index. Others might opt to invest in individual stocks, placing their bets on the success of specific firms. In essence, it's about discovering a strategy that aligns seamlessly with your financial goals and risk tolerance. Once your strategy is in place, it's time to delve deep into research, which forms the bedrock of successful investing. This is where you'll dedicate time to studying different companies, industries, and market trends. Your knowledge journey should encompass keeping abreast with economic indicators, company news, and market shifts. This knowledge can aid you in making informed investment decisions and might even enable you to identify opportunities or risks well in advance. And now, for a crucial piece of advice: don't let your emotions control your investment decisions. The stock market can be likened to a roller coaster, with its share of thrilling highs and terrifying lows. It's all too easy to get swept away in this whirlwind of emotions. But remember, investing is a long-term game.
It's not about immediate gratification, but about planning and patiently waiting for your investments to bear fruit. As the saying goes, Rome wasn't built in a day, and neither is a robust investment portfolio. Investing is an art that requires patience and prudence. Remember, investing is not a sprint, but a marathon. Patience is key.
Finding the right stocks can feel like finding a needle in a haystack, but don't worry, I'm here to guide you through it. Picture the stock market an enormous, almost endless ocean. It's teeming with a diverse array of fish, each one representing a different company, industry, or sector. Some are massive, like the whales of established blue-chip companies. Others are smaller, darting fish, representing startups and businesses in emerging sectors. Just like an ocean, the market is in a constant state of flux. Sometimes it's serene and peaceful, with prices gently rising and falling. Other times it's as stormy as a tempest, with drastic fluctuations that can either make or break an investor's portfolio. As an investor, it's your duty to navigate these tumultuous waters and determine which fish are worth catching. The first rule of thumb in this quest is diversification. It's similar to casting a wide net rather than focusing on a single area. You wouldn't want every single one of your eggs in a single basket, or in this case, all your fish in one net. Spreading your investments across a variety of sectors can significantly decrease the risk of losing everything if one company, sector, or economy underperforms. Next, invest in what you understand. Before choosing a stock, understand the species you're hunting. Research the company thoroughly. Its business model, its competition, its financial health, and its potential for growth. The more you know about a company, the more likely you are to make a sound and informed investment. Following market trends is another essential step. The stock market is influenced by numerous factors, from economic indicators to political events, and even societal shifts. Paying attention to these broader trends can provide valuable clues about where the market might be headed. For example, if there's growth in societal focus on sustainability, renewable energy stocks might be a favorable catch. However, it's essential to understand that the stock market isn't a shortcut to wealth. It's not a sprint, but rather a marathon. It necessitates patience, resilience, and the willingness to learn from your mistakes. The goal is to make informed decisions, not impulsive ones. Lastly, don't shy away from seeking professional advice on your investing journey. Numerous financial advisors and brokers, as well as online platforms, can provide valuable insights and guidance. They can help you spot trends, understand complex financial data, and make informed investment decisions. So, there you have it. A glance at the vast ocean of the stock market, a place where diversification, thorough research, understanding market trends, and seeking professional advice serve your compass and map. Choosing the right stocks is an art, one that you'll perfect over time. Now that you've done your homework, it's time to take the plunge. The first step to becoming a stock market investor is to establish a brokerage account, your gateway to buy and sell stocks. Numerous options are available, and it's crucial to find one that caters to your preferences. Once your account is finalized, you're set to make your transaction. Note that investing isn't about quick profits. It's about steadily growing your wealth. Hence, pick your stocks meticulously and always invest with a long-term outlook in mind. As an investor, it's your responsibility to keep track of your investments. Stay updated market trends and news about your selected companies. Use information to adjust your portfolio as required, but bearing patience is paramount, and you have it. You're now officially a stock market investor. Let's quickly recap what we've learned today. We've unveiled the mystique of the stock market, brushed up on investment basics, and mapped out how to get started with investing. We've explored how to choose the right stocks and even walked through the exhilarating process of making your first investment. It may seem like a lot, but with patience and practice, you'll become more comfortable with these concepts. Remember, the journey to financial independence begins with a single step. Happy investing!